Markets in turmoil. Tuesday, February 6th. Been getting a lot of new guy questions like, is the bull market over? Are we moving to a bear market because we've had two red days after going up like 60% in a couple of years? We didn't really go up 60%. Just joking. But all right, from a macro standpoint, yes, the market's come off highs a bit, come off 10% very quickly, 2 or 3 days. But if you look at a weekly chart, you can see that it's just a blip on the radar. We're still moving higher. This was 2012. We've moved a ton higher in 2017, and to suggest that we're going to a bear market 3 days in is just over anticipating on a level that you really shouldn't be, and you're only going to lose money and give yourself false signals. And if you're trying to short right now after 3 days down, you're going to have a really bad time. You're going to get your face ripped off. But what I want to talk about is how I was able to not really catch this down move being long. So we participated this whole trip. I was pretty long, and you heard me in the chat every day. We're going to wait for that rug pull day will come. Have to watch this channel, and if you follow our trading, I'm pretty big on short-term moving averages like the 8 SMA. So when the market, we gapped down off this huge rising channel and we tried to push up, and then it became resistance. This day, that was the day. That was the key for me. I got flat most of my stuff. I mean, breakouts weren't great in this area when they were just so easy. So easy. You could buy anything and everything was working. So then when we start to get the clues that breakouts aren't going to be working, when we start to see our high beta names breaking out and then failing, that's the biggest clue. So during these times, I don't really want to be over-involved because it's very difficult and it's very random. I don't have the huge amount of layers of probability on the side. I'm not finding as many tight risk entries into stocks that I really have a good feeling of where they'll be going in a week. It's a lot more random action. You have to be a lot quicker with your executions. So it's great for the active trader. I mean, I took a nice trade in the SPY today. I bought 260. I was able to sell 267. But I mean, I have to take such small size in those trades. They're not going to make my year at all. It's the long swing trades that really make my year. Right now, this is just like the pocket change or lunch money type trades. But I'll still be active, still taking those trades, but I'm not really loading the boat until things settle down. Right now, the market needs a ton of consolidation and just digestion. We're going to be wide and sloppy for a bit. Now that this chart broke, I would expect wide and sloppy action as the market tries to discover its new levels of support and resistance. Just cruise through like $20 of support right there. So a lot of watching and waiting. I'm a huge proponent of you don't always have to have money in the market. I mean, the huge advantage we have being active traders is that like I got out of the market here, and it's funny because hindsight at the time when I'm getting out of the market, you're still thinking like, fuck, am I missing out? You have that FOMO because the market's just like been raging. I haven't really seen anything like it. So I got out here, and hindsight 2020, it's like, oh yeah, it's so smart or whatever, but just following those clues, the market internals, seeing breakouts work, following the relative strength and relative weakness, all right, and you can avoid that. So my account's probably only 1% off highs, as the market's 10% off highs. So I feel it did a really great job being all along through this and then not catching this downside. So going forward, I'll take my quick trades, but overall, much lighter and much quicker to take profit. And that's really it. All right. Good luck. Happy trading.